Okay, everybody. Happy Macro Monday and TGIM. It is the 25th of September, I believe. We are coming down to the end of the third quarter. Time flies when you're having fun. I'm, of course, joined by my trusty number two man, James Kim, who will be covering the charts, and I will be covering, obviously, kind of the global kind of macro kind of backdrop. Obviously, everything that we say and cover here should not be construed as investment. No trading recommendations. It's solely views and opinions. So quick rehash of basically last week. Great to be back in the back seat after some traveling in Europe. We basically had the Fed basically saying all systems kind of go, at least it seems for now, with balance sheet reduction set to kick off in October. We've also seen a few academic papers as flagged by our chief economist, Steen Jacobsen, basically kicking the Phillips curve to the curb, which we kind of feel is maybe a way for them, looking to kind of solidify their future, their decisions, at least kind of in the future. So, again, nothing unchanged, at least from my perspective in regards to that, and as also in regards to kind of the Fed hike in kind of deck. There's, of course, still the big kind of question in regards to kind of how the Fed's board is going to be kind of staggered. So just something to watch out for. Of course, we had the famous kind of UN kind of Trump speech. Everyone put their country first. To be honest, I thought that's what North Korea and Iran were doing, but definitely something to kind of keep watching out for, especially now that I guess you could say that the proverbial ball is back in North Korea's kind of court. Worth noticing that also flash PMIs out of Germany and France beat very, very strongly to the upside on both manufacturing and services on Friday, and of course the two of those are the majority of the Eurozone kind of growth, so that's quite positive to see that kind of going. Of course, also on the election kind of front on Germany, it looks like Merkel is going to have to put together a more kind of complex kind of coalition than was initially envisioned. I would take, at least from John Hardy, is that's net kind of negative for the Eurozone because it's moving away from kind of co-integration and more what France was kind of pushing for, as well as kind of Macron. So it's definitely something to kind of keep watching. From NASDAQ's perspective, generally new highs again on equities, kind of grinding up higher. While it may start to look stretched on some of the U.S. names, again, it is worth noticing that volumes have been quite strong over the previous two kind of weeks up. I've also seen that also on the other side of the Atlantic with stuff like the DAX. Fixed income obviously wider with rates higher and bond prices lower. Key level is really, I think, 233 for me, at least on the U.S. 10s, which is a 200-day kind of moving average. Commodities has generally been kind of downtrend. Oil and aluminum bucking the trend, which is, I think, kind of interesting, especially aluminum, while copper and iron ore definitely in quite a bit of a corrected kind of phase, which shouldn't be too surprising given how strong we've been. And also a few other things kind of looking constructive are corn and wheat, which seems to have based, as well as cocoa. On FX, USD was up on the week. Euro was very much kind of unchanged. Most, I think, of the DXY gains came from dollar-yen moving up over 100 basis points. Also interesting to see continue quite big pullback on Aussie Kiwi. On vol, again, the regime for now still stands, and we're back sub 10 with another kind of degradation of about 6%. I would expect us to potentially be looking to test that kind of 884, which I believe was kind of the low tick on that side of things. For the cut report, again, not too much delta in regards to shorts. We have, again, the biggest short position in U.S. dollars since 2013. I actually saw a Kyle Bass interview, which he said it was the biggest short ever, but I'm not quite sure how he's measuring that. But at least from an aggregate perspective, it's 2013, and going back to like 2011, it was actually almost, I think, over double this. So it's still room to go potentially. But what was interesting was this big sizable tick down in euro longs, almost by a third, down to 63.7, 1,000 kind of contracts, and you can see that's like off the kind of recent high that we'd seen. I think this is a combo of not only the reversal in euro sterling, but as well as not potentially being able to push through kind of 120 as it had kind of done through all the kind of previous moves kind of up. Interesting to see, obviously, euro also down this morning session, whether that's the kind of digestion of the election results over the weekend. A little bit too early to kind of say. We are seeing new record lows in cable. This is something we've been flagging about and talking about for Macro Monday for months now. This is the lowest now since November 2015, and I expect this trend to continue until the market starts to get net long And also worth noting that Aussie making new 4.5-year highs in regards to kind of net long kind of positioning, which I think is interesting, seeing the plus 17% in kind of loony net longs increased. On the commodities report, it's interesting to note that Ole has now added both Brent crude as well as kind of gas oil. So do watch that. Of course, you can also see a lot of the energy contracts are towards kind of their highs there. Gold still, at least compared to the 1-year high, quite heavy. We've had a decent tick up in WTI kind of positioning by about 32%, and we've had a bit of a touch of a pullback on the precious metals, which was, I think, also interesting last week because obviously GDX and SIL have also had pullbacks over the last 2 weeks. But again, interesting to notice much lower volumes on the pullbacks compared to the volumes and kind of the big moves kind of up. So basically, key focus this week is really going to be inflation theme. Because we have PCE out of the U.S., which, as you all know, the Fed watches, as well as this actually should be flash CPI, not flash PMI, coming out of Eurozone. So we'll have 1.2 headline expected, 1.2 as well as core, and in Europe, in the U.S., 1.5 on headline and 1.4 on core expected and previous. And then we also have a host of different kind of central bank kind of governors. So we have about 16 different kind of Fed speakers, as well as a whole host of emerging market banks, except for RBNZ on Thursday. No real much things kind of expected from either of them. I don't really have a strong kind of view. We, of course, also have BOJ kind of minutes to watch. But as you can see, a lot of central bank governor speakers. We also have a BOE Independence Conference. Lagarde will be speaking there, as well as obviously Carney and Draghi. So, potentially quite a bit of event risk off of some of these kind of Q&As and panels and so on that could be kind of expected. The other important economic data is going to be final GDPs coming out of the like of the US 3.1 and the UK 1.7, as well as also Friday should be seeing the hikes in manufacturing PMI 51.5 expected. Official ones for now are scheduled for Saturdays, but sometimes we've seen those move further kind of ahead. In regards to kind of strategic view, I don't think there's too much unchanged. I mean, I have to admit, about 2-3 weeks ago, I was hiding beneath my desk with my kind of short duration call when US 10s were kind of going towards around 2%. But I still think that structural short duration makes sense, as well as structural long in commodities, including especially silver and gold miners. As well as oil. I'm one of, I think, a few people out there were saying we'd get to above 50 on WTI. The short Jan 2019 Fed Fund futures is working out remarkably well, and still only like long U.S. dollars selectively versus things like the Swissy, which has responded quite well since the FOMC last week. A lot of other crosses kind of gave a lot back, as well as the Singapore kind of dollar, and would look for, let's say, multi-year longs and stuff like sterling. Granted, we have moved epically over the last kind of 2 weeks since we started to kind of mention this. Still favor EM, high-yielding FX and sovereigns, and still see this base case of view as reflation. And the title, obviously, of this page is of this Macro Monday week is getting ahead of itself a little bit, but we are starting to see beats on inflation after months of kind of going sideways to misses on, so from the US, China, as well as PPI from China, and also the UK CPI beating to the upside. So it'll be interesting to see how we get PCE this week, and of course, how another set of month goes. Technical picture, at least from my perspective, dust needs to kind of settle post FOMC. Again, I'm not so sure of concerted kind of US dollar broad-based, reversal, if that makes sense, i.e. strength. Just a few things, we've corrected over 10% from the peak of the DXY. Fed is far from the only hawkish game in town, which was, pretty much the case that they had from 2014 to 2016. They were really only the only game in town, but now there's a host of hawkish banks out there, from BOE to Bank of Canada, to obviously QT being discussed by the ECB, and so on. And it feels more for U.S. dollar kind of coordinated strength. We need a lot more fiscal measures rather than monetary measures, and we know the mark-to-market on that, at least from an execution perspective, from the Trump administration, has been pretty poor. But pressure is escalating every day, as we do have midterm elections for 2018, which I think will only bring that much more pressure on the Republicans to get some kind of deals across the table. On the flip side, obviously, it's the largest short position since 2013, and some say potentially even biggest U.S. dollar short position. But I think that could be maybe just from a hedge fund short perspective. So that does mean that there's maybe a little bit of room in tactical squeezes. But again, I'd be selective about how to kind of play that. On positioning, obviously big move in kind of duration. It'd be interesting to see if this week is a little bit more of a sideways, or if we kind of continue kind of back up. There's a lot of wood on US 10s from this kind of 2.20 to 2.30. At the same time, the high conviction on SIL, which is a silver miners ETF, has been hurting, and the sizing that I've been doing on this actually has been kind of all wrong, because these were kind of put up against Bund shorts, which have worked out very well, DAX longs, which we basically took out a little bit too early. So there's been a little bit of position kind of mismanagement, at least across the books, but I still feel that it looks like we're kind of bottoming it out on SIL and GDX, but we'll have to wait and see how that kind of goes out over the next kind of few weeks. And again, as I said, on equities, maybe looking a little bit kind of stretched, but the technicals, at least from my perspective, they're still not unchanged. It'll be interesting to see what JK has to say about that. And it's still worth noticing that the volumes have been higher on the moves up over the last few weeks than on the moves kind of down. But with that said, you are seeing a few of the FANG kind of names kind of break down, and kind of the tech leaders, if you will. So stuff like Amazon, stuff like Tesla. By no means kind of a trend, but definitely kind of worth noticing. Going on to this is the North Korea slide. I'm going to keep this in for a while because, again, I don't think this has kind of gone anywhere, but obviously we covered it a few kind of weeks back. This here is for the Bitcoin enthusiasts. We do have Bitcoin ETN, which is an exchange-traded note. Do note that means the credit risk lies with the issuer of this. This is actually traded out of the Stockholm exchange and is available with a euro underlying and a Swedish krona underlying. Get in touch with your sales trading desk if you want more kind of info on this, but this is just off of the demand of clients and interest in the space as we wait for a lot more ETFs, and also believe the CBOE is developing a futures on this. But for now, you can pretty much only go long, so you can't short it yet, at least not with this security that we kind of have. But been a lot of interest in this, and I just thought I'd include it. And going on to kind of the books before passing over to JK, we closed outright short vol through long SVXY calls from when they went to expiry. Expired well into the money. That was a phenomenal return, 188% on premium, about 47,000 added to kind of P&L. The mismatch you can see on the market is really happening again on this silver miners big kind of pullback again from a timing kind of perspective. And this was kind of linked to the DAX, and in actuality, either should have been left the DAX kind of in, or at least reduced this when I closed off the DAX. So we'll have to see how that kind of works out over the next kind of few days. On the strategic book, again, I don't know why we keep having issues with this slide, but I will put in a new slide when we send out the deck and we upload it onto tradingfloor.com. But again, same thing. First target hit on Bunds. First target hit on the short Fed fund futures, which is great, as well as a call spread that we also had on SVXY, which again was the short vol play in the strategic book. And this was basically a net total of 113 basis points, so about 113,000 to the portfolio, which was quite a great win. With that, let me please pass it over to JK to run us through some exciting.
Thank you, Kay. Starting off with the US dollar index, the weekly chart shows continued settlement below that 200 weekly moving average and also below the 2015-2016 base. However, the US dollar index has now made its second higher weekly settlement since printing a new 2017 low 3 weeks ago. I'm just going to... Okay, so the daily chart is showing that Right in front of the US dollar index, with the potential gains, sits the 2017 downtrend, which has capped gains from April through May and June. And again, last week's attempts at gains failed at this downtrend. The test becomes more important than ever, with the dollar index about to go through potentially a defining move this week, should it be able to clear this 2017 downtrend. First resistance is served at 92.50, these levels here, followed by the 200 weekly moving average at 92.79. We need a weekly settlement above this 2017 downtrend for a reason to turn bullish. The euro trades below a very short-term August-September trend line, with an attempt at making higher ground last week, finding resistance at this very uptrend that it broke, which coincided with a 76.4% retracement between the 2017 top to the swing low we saw here. It's interesting to note that attempted gains on Friday failed at the 120 handle. This is going to remain as the session resistance ahead. Above here, we expect the same trend line to cap gains over the euro this week. The euro also trades above the April-June trend line, which halted selling last week. And should the euro disrespect this trend line this week, it is expected that a further sell down could be in store. So first support is this trend line here, followed by 117.80. 117.26, as I've marked here on this chart, is where the 200 weekly moving average sits and is expected to offer some decent support here. The euro sterling fights to stay above the 50% retracement level between the April low to the August high, and it has produced a mini double bottom on a very short-term scale. RSI starts to tick over from being oversold, so we may see a slight retracement this week. However, the ultimate target on this down move is yet to be seen. We continue to monitor for a completion of a 61.8% retracement at 86.90, which translates to a gap fill from here in June, and this is also where the 200 DMA lies as well. Not only has the Aussie dollar now broken below the short-term August-September trend line, it has made a clear break below the June-July-August trend line last week. Now, last week's squeeze to the 81 handle and the subsequent reversal in the same session was the giveaway of the weakness to come. And this week we monitor for follow through in this move to the downside. The 80 handle is expected to cap gains, followed by 80.10, then 80.20, 80 by, and then 80.10, 80.20. These are the levels to take potential short positions. Downside support starts at the 200 weekly moving average at 79.41, with a weekly close below here, raising the probability of a retest of those 2017 breakout levels, as I've marked here on the chart. The dollar yen settles above its 200 weekly moving average for the first time since mid-July, and is also staying afloat the 200 daily moving average, which would need to hold in order for further gains ahead. Focus is going to be at the 113 handle though above here. I say 113 handle because 113 handle, interestingly, is a repeat of the range between the last rally we saw between June up to July. So that's going to be the first focus ahead. And the 200 DMA is expected to hold losses, followed by the 200 weekly moving average at 111.69. Those are the levels to watch for support. The ASX 200 looked to break that multi-month low last week, but it happened to spring back and now trades in a sort of a triple bottom formation, and we are continuing to see that 4-month consolidation playing out. With this week, the 200 DMA expected to potentially offer some resistance for gains ahead. The S&P 500 looks very resilient. No significant technical readings here, except that momentum seems to be picking up, which is in line with what Kay was mentioning before, that volume is picking up, and that's been translated into the RSI. Lastly, on gold, we have seen that much desired retracement to that 2017 breakout level. However, we're not seeing that immediate reaction or that immediate bounce off these levels. So we start the week here with a neutral tone, with the weekly test to be able to settle above that 1295 level, or again, that 2017 breakout level. That's it from the charts and the week ahead. Back over to Kate.
Thanks for that, JK. Wishing everyone a fantastic week up ahead. And if you don't already know, do check in for our daily kind of calls that are driven out of Europe later on. And have a great close to the quarter, everyone. Thank you very much.